Welcome to Hong Kong Brief. The content of the briefing includes weaker yen and top-quality snow lure investors to Japan ski resorts. Early Xiaomi Backer to surpass funding goal in major China test. Hong Kong's pro-democracy leaders to give final defense as landmark national security trial nears an end. Hong Kong urged to target listings from Middle Eastern companies. Dollar slides, treasuries extend gains on Fed bets, markets wrap. Weaker yen and top-quality snow lure investors to Japan ski resorts. Financial Times. Niseko, a town in northern Japan, has seen a surge in property prices following its transformation into an international tourist destination. The area has attracted skiers and investors due to a weak yen and the reliable volume of high-quality powder snow, which has benefited from global warming. The weak yen has intensified the pent-up demand for property in Niseko, with buyers from China, Hong Kong, Singapore, Malaysia, and Asia-based expats from Australia, Europe, and the US diversifying the real estate investor profile. Property prices in one residential area near Niseko rose 44% in early 2020 and a further 25% in the following year. The reopening of Japan's borders for international travelers from late 2020 has led to an increase in transactions, with some villas and apartments sold at record prices. The market is also expected to move to the higher end, with several luxury hotels and resorts set to open in the next 3 years. However, the development projects and influx of international travelers have caused labor shortages, infrastructure constraints, and water shortages, leading to concerns about overdevelopment and the depletion of natural resources. Early Xiaomi Backer to surpass funding goal in major China test. Bloomberg. China's 5Y capital is set to exceed its target of raising $700 million for a venture fund, suggesting that investor confidence is returning to the country's tech sector. The US dollar fund, which has a hard cap of $800 million, is expected to close early next year. The successful closing of the fund will be seen as a positive sign for China's startup scene, which has been affected by COVID-19 lockdowns, a regulatory crackdown on the tech sector, and the US-China trade war. China has seen $44 billion in venture deals so far this year, down 65% from 2018. Hong Kong's pro-democracy leaders to give final defense as landmark national security trial nears an end. CNN. Prosecutors and lawyers in Hong Kong are making closing speeches in the city's largest national security case to date. The 47 activists and politicians have been charged with conspiracy to commit subversion for their roles in holding an unofficial primary election in 2020 to decide who should contest city lawmaker elections. Prosecutors argue it amounted to a massive and well-organized scheme to subvert the Hong Kong government. If convicted, they could face a maximum punishment of life imprisonment. The prosecution is the most sweeping crackdown on Hong Kong's pro-democracy camp since Beijing imposed a national security law on the semi-autonomous city in 2020 following mass anti-government protests the previous year. The 47 defendants include seasoned politicians, elected lawmakers, and young protest leaders, as well as academics, unionists, journalists, and medical workers. They hail from multiple generations and a wide political spectrum from moderate Democrats to those who advocate for Hong Kong's self-determination. Hong Kong urged to target listings from Middle Eastern companies. Financial Times. Hong Kong should focus its efforts on attracting companies and investors from the Middle East and Southeast Asia, according to recommendations made by a government task force set up to boost stock market listings and trading activity. The task force's report, delivered to the government last month, said outreach to the US and Europe had been hampered by China's strict zero-COVID policies. The call follows a year in which bourse operator Hong Kong Exchanges and Clearing has sought to raise its profile by launching new offices in New York and London. Dollar slides, treasuries extend gains on Fed bets, markets wrap. Yahoo! The dollar declined and treasuries continued a November rally, on growing expectations that the Federal Reserve is done with policy tightening and may start cutting interest rates next year. Chinese-style quantitative easing emerges as property fix option. Bloomberg. The People's Bank of China, PBOC, may resort to quantitative easing, QE, as the country's property market continues to slump, according to unnamed sources cited by Bloomberg. The PBOC is reportedly considering providing 1 trillion Chinese yuan, $140 billion, in low-cost funding to construction projects via a program called Pledged Supplemental Lending, PSL. Under this scheme, the central bank would accept loans as collateral from policy banks to fund lending to housing and infrastructure sectors. QE was previously used between 2014 and 2019 to help fund a boom in home building. This led to the creation of money and an expansion of the PBOC's balance sheet. The property sector, which at its peak represented around a quarter of China's economy, is still plunging, with home prices falling the most in 8 years in October. First FT, Goldman Sachs cuts back growth at all costs China strategy. Financial Times. Goldman Sachs CEO David Solomon has said the bank has moved away from a growth at all costs strategy towards China, citing tensions between Washington and Beijing, which he says could take years to resolve. Solomon said the bank is being more conservative towards China, but added that the bank is encouraged by recent dialogue between the U.S. and Chinese governments. China's Meituan launches $1 billion share buyback program. Reuters. Chinese food delivery company Meituan has confirmed it has authorized a share buyback of up to $1 billion after its CEO expressed the board's intention to do so. The buyback will begin on December 1. Meituan is China's largest food delivery provider and expects growth in its core food delivery business to slow in Q4. Positive economic signs as inflation falls sharply. The Sydney Morning Herald. Inflation in Australia fell sharply in October, with the annual rate dropping to 4.9% from 5.6% in September, according to the Australian Bureau of Statistics. The figure was below market expectations of 5.2%. Rents, one of the biggest factors in inflation, fell from an annual rate of 7.6% to 6.6% as the government's changes to Commonwealth rent assistance started to take effect. The annual rate of inflation for food and non-alcoholic drinks increased to 5.3% from 4.7%, but prices were up just 0.1% in the month. Singapore's SPAC debut is so last season. Bloomberg. 17Live, a Taiwanese streaming and online dating service, is set to merge with Vertex Technology Acquisition Corp in a deal worth $692 million. This will make 17Live Singapore's first-ever combination with a locally traded blank check stock. The deal is expected to be completed next month. However, some analysts are skeptical about the merger, questioning whether 17Live is worth such a high valuation. The fate of other consumer tech businesses from the region that merged with blank check companies is not inspiring confidence, with shares in Grab and Property Guru trading well below their pre-merger valuations. Chinese are making a killing everywhere but in China. Bloomberg. Chinese entrepreneurs are increasingly targeting overseas markets, particularly the US, in order to tap into new consumer bases and escape the competitive landscape at home. This strategy is proving successful, with companies such as Shine, Temu, and Miniso experiencing significant growth and success abroad. Chinese companies are capitalizing on trends such as consumption downgrade in the US, where consumers are seeking value-oriented products. These entrepreneurs have also learned from the challenges of doing business in China, where natural monopolies and competition from disruptors can be difficult to navigate. Overall, Chinese companies are finding opportunities for growth and success in overseas markets, particularly in the US. UK-led group to deploy ships to Baltic Sea after pipeline damage. Bloomberg. 10 northern European countries have agreed to deploy vessels and planes in the Baltic Sea region to protect critical undersea infrastructure following suspected acts of sabotage. The defense ministers of the Joint Expeditionary Force have activated a response option for the first time, using maritime and air capabilities to ensure security in the area. Finland, Estonia, and Sweden are investigating incidents on an undersea gas pipeline and 2 communication cables in the Gulf of Finland as acts of sabotage. NATO has pledged a response if the incidents are found to be deliberate attacks on critical infrastructure. Dubai is bucking a global slowdown in luxury real estate sales. Bloomberg. According to real estate company Knight Frank, the number of homes sold for more than $10 million in the third quarter of 2022 decreased by 2.4% compared to the same period last year. London, Singapore, and New York all saw a decline in superprime home sales, while Dubai, Geneva, and Hong Kong experienced increases. Despite the slowdown, the overall value of luxury sales in the past 12 months was higher than in 2019, but lower than the post-pandemic high in 2021. Knight Frank predicts that sales will continue to decrease next year as fewer luxury homes are built. Farfetch founder bids to take company private. Telegraph. Reuters. The founder of online luxury retailer Farfetch, Jose Neves, is reportedly considering taking the company private following a troubled listing on the New York Stock Exchange. Neves is said to be working with advisors at J.P. Morgan and holds a 15% stake in the company, with 77% of voting rights. Major backers, including Alibaba and Richemont, are believed to support the move. Temu parent PDD's market cap closes in on Alibaba after revenue doubles. Nikkei Asia. Chinese e-commerce giant Pinduoduo's (PDD) market capitalization has nearly caught up with that of its rival Alibaba Group Holding. PDD's Q3 2022 revenue rose 93% to 68.84 billion Chinese yuan, $9.66 billion. The company's shares rose 18% on the news, giving it a market cap of over $183 billion, compared with Alibaba's $193 billion. Revenue was driven by 39% growth in online marketing services and a 315% rise in transaction services, partly due to the contribution from cross-border e-commerce platform Temu. However, PDD did not disclose revenue or other data for Temu. That's all the news for today, folks. We've covered a range of stories from around the world, from the surge in property prices in Japan's ski resorts to the ongoing national security trial in Hong Kong. We also saw some interesting developments in the tech sector, with China's 5Y Capital set to exceed its funding goal and Meituan launching a $1 billion share buyback program. One theme that stood out today is the increasing success of Chinese companies in overseas markets. We saw examples of this in the luxury real estate sector, where Dubai, Geneva, and Hong Kong saw increases in superprime home sales. Chinese entrepreneurs are also finding opportunities for growth and success abroad, particularly in the US, where companies like Shine, Temu, and Miniso are experiencing significant growth. However, it's not all good news for China. The People's Bank of China is reportedly considering quantitative easing measures to boost the slumping property market, and Goldman Sachs CEO David Solomon has said the bank is being more conservative towards China due to tensions between Washington and Beijing. Overall, it's clear that the global economy is facing a range of challenges and opportunities. It will be interesting to see how these stories develop and what the future holds. Now, over to you. What are your thoughts on these news stories? Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.